Hi and hello, and thank you so much for tuning in. And if you are new, welcome to my channel. My name is Preeti Rao and I am both a real estate and a mortgage broker for close to 20 years. Now, last week I did a video on the 30-year amortization for first-time home buyers. And as promised, today I will cover the second rule, CMHC increasing their lending threshold cap from 1 million to 1.5. Now, this one is quite interesting because as much as the first rule really helps first-time home buyers with the monthly payments, this one's actually putting them in more debt. According to me, this rule does nothing much except put people actually in deeper debt. Not sure what I'm talking about? Well, let's do the numbers together. But first, please be a sweetheart and hit that like, share, subscribe button and that bell icon. It gets me motivated to keep you up to date with everything real estate. Now, you already know that if you buy a home that's over $1 million today, you have to put 20% as the down payment. No exceptions. The advantage, you will not have any CMHC insurance premium that you have to pay in advance. Plus, you automatically qualify for a 30-year amortization. And the best part, the entire 20% goes directly as a down payment because there are no additional premiums that you pay. But come December 15th, that rule is actually going to change, or let me say you will have another option. The government, in their infinite wisdom, along with CMHC, decided to move the threshold from 1 million to 1.5. Now, every buyer is getting super excited, but people within the industry are actually questioning this move. Is it really for the buyers or the banks, or better yet, the builders? So let's break it down, shall we? Let's say that you are going to buy a home that's around $1.4 million today. You will have to put down a minimum of 20% as the down payment, which amounts to around $280,000, with the loan amount coming down to $1.12 million. No CMHC premium, and let's say that the rate is still at 4.5. Your monthly payments would be approximately $5,648. Simple, right? No fuss, no muss. You make the payments on time. You watch your principal slowly go down over time. Now, let's take the same 1.4 million and go with the new rule. The minimum down payment that you will have to put is around $115,000. 5% on the first 500 and 10% on the remaining $900,000. That's if the rule still stays the same. Now, that is good because approximately you will save around $165,000 as the down payment. And that's a lot of money. So now what you have to put down is just $115,000, taking your loan amount to around 1.285 million. So that 165 that you saved now gets added to the mortgage. Not an issue. You don't have the funds, so that's not bad after all. But now comes the actual cost of borrowing these funds. And this is where CMHC gets their grubby little paws into it. If we are lucky and they do not make any additional changes, then we will go by the standard 4% premium that they would charge anybody. That means $51,400 gets added to your mortgage, taking your new mortgage from 1.285 million to approximately 1.337 million. Okay, now let's go with the payments. Let's keep the interest rate the same. Your monthly payment now would amount to $6,742 per month. Going back and comparing the payment between the old rule and the new rule, the monthly payment difference is approximately around $1,100 per month extra that you will have to pay under this new rule. Now, if this is something that you can afford, then kudos to you. This program then is very good and it's meant for you. But what if CMHC increases their premium from 4% to 4.2, which is the rumor, by the way? Your premium amount will now jump up to $5,400 and your loan amount will jump up to 1.339 million, and your monthly payments will jump up to 6,752. Tomatoes, not much of a difference there. I mean, if you can make the payment of 6,742 easily, then 6,752 is not that far away. It will not break your bank. But the main point here that I'm trying to show you is not the payment It is the equity that you will be walking with when you walk into your home. Today, when you buy a home, you actually have to put down 20%. That is purely your equity that you've put into your home. Tomorrow, if you opt for this new rule, your equity walking into the home as a buyer will be approximately 4.3% as compared to 20%. Now again, you want that home, you love that home, and you can afford the mortgage payment, which is close to $7,000 a month, then this program is meant for you. But the fact is, can everyone actually afford this? Do you really think when your realtor takes you to those pre-construction properties that are listed for 1.4 million that look extremely beautiful on paper, and they tell you, don't worry now, CMHC will approve this, you don't need 20% down, just 5% is enough. And you've heard this in the news, you've heard this on social media, it's all over the place, and you're like, yeah, that's cool, let's buy this home. My only request to you at that point is please speak to a mortgage broker first. Get to know the cost of actually owning this home, because you have the mortgage payment, you've got the property taxes, you've got the utilities, and remember, builders are actually charging you future price, and you do not want to be stuck at the last minute scrambling for funds just because you did not stop to think and do your due diligence and talk to the right people who will give you the right advice. Again, guys, I'm not saying that all agents out there are crooked. I know a whole bunch of realtors and mortgage brokers who actually genuinely put their clients' needs and requirements before their own. But I have also seen the opposite side of that coin, and I have seen naive and innocent clients fall for those traps. So when it comes to this new rule, do your financing homework first before you sign on any of those dotted lines. Because from where I stand, I can see this rule basically benefiting the banks and the builders, and the ones who will be paying through their nose will be you. So tell me what you think about this new rule. What will it do in the market? Put that in the comments below, and watch my next week's video on the no stress when you switch banks. Another attempt in the name of affordability. Till then, you, my dear friends, take care, and if you find this information useful, please do not forget to subscribe and hit that like button. If you still don't know who I am, go check my rating on Google and read my client reviews. Join me next week for more information. Until then, you all stay safe. Thank you so much for watching, and don't forget to call me because I hold the key that opens a door to your dream home.